So 5 days ago, I released a video with the title, How Much Cash to Hold in This Stock Market? And in that particular video, at least in the tail end, I've actually gave a preview of my most current updated holdings of my portfolio. But I've blanked out the 2 latest edition. And I've even invited you guys to hazard a guess as to what names did I add. And we have actually received overwhelming responses for that video. Oh wait, maybe overwhelming was an exaggeration, but we did get 3 guesses out of a 7,000 view video. And yes, I can totally understand if you guys don't like to comment, but please remember to at least help me smash the like button. But anyhow, out of the 3 guesses, 3 out of 3 guessed United Health, and 2 of you guessed Novo Nordisk. And for investors that are highly plugged into the markets, you know that healthcare as a sector has been extremely beaten down. And for long-time followers of this channel, you probably would extrapolate my investment style, and I could have taken advantage in this particular unloved sector. And without further ado, without wasting too much of your time, I've actually in fact added 1 more position out of the 2. And they now sit at roughly 1.31%. And these 3 specific names are Copat, Novo Nordisk, and Eli Lilly. So thank you for your time. The results are out, and if you wish to click away, but if not, if you wish to stay on, I'll be talking briefly about mainly 2 companies, which is Copat and Novo Nordisk. What was my thought process? How do I understand the business today? And why did I actually decided to finally pull the trigger on these 3 companies? And of course, with Falling Knife being my middle name, you can see that all 3 companies, Novo, Eli Lilly, and Copat, they're all trading near their 52-week low. Even though, I think if you take a longer term view, over the past 5 years, Eli Lilly especially is up over 300%. What if I told you you could get free Nvidia shares just for getting started with investing on Longbridge? So Longbridge, a MAS licensed broker in Singapore, has a promotion running right now. And if you sign up with my link and deposit just 2,000 Singapore dollars, here's what you get. A 6 plus 6% per annum interest boost on your first $2,000 for 90 days, exclusively through my link. And that's $60 in interest if you park the cash in their Cash Plus product. On top of that, you get an additional $18 cash coupon just for signing up and depositing. And if you hold your funds for 30 days and complete 3 buy trades, you'll receive half an Nvidia share worth about roughly 100 Singapore dollars today. And add that up, and you're looking at around $178 in value on a $2,000 deposit. And that's 8.9% before you even start investing. So you also enjoy lifetime commission-free trading for US, Hong Kong, and Singapore stocks. 0 platform fees, and if you've got more capital, rewards can go up to $800 in total just for getting started. So don't miss this out. Click on the link in the description below to grab your exclusive rewards. And thanks to Longbridge for sponsoring this video. So let's first talk about Copat. I've actually did an analysis piece on this company around a month ago, and I'll leave the link in the description below. But the long and short of the story is that Copat is basically an online auction house taking in damaged vehicles, usually from insurance companies, and selling them to the dismantlers, rebuilders, and dealers, etc. And they're currently the dominant player in the US salvage car auction industry, operating in a duopoly with another company called IAA. And the mode of the business actually revolves around these 3 key pillars. Firstly, it's the high physical barrier to entry due to their ownership of the strategic junkyard land assets in the US today. And in fact, some of you might ask, why is that even a barrier to entry? And if another company with deep pockets come into the picture today, can't they just acquire land to compete with Copat in this case? I think the answer to that is yes and no. Yes, if you actually do have infinite amount of capital. But let's not forget, I think like any businesses, the unit economics need to make sense. And if the land acquisition cost is so much higher than the operating profits that they can expect or project out, nobody is going to sink in so much investment on the upfront. And why did I say no as well? Is because it's not as easy as just having enough money to acquire land assets. In fact, there are a lot of regulatory approval. You need to get the buy-ins of the people living in that area, so on and so forth. And that's why these land assets acquired by Copat over the last few decades have become a very, very strong physical moat. And secondly, when we talk about network effects, I think like any global networking platform, you probably need meet both the demand and supply side. And thirdly, it's the switching costs from the insurer's perspective due to the long-standing relationship between Copart and their insurance partners. But to me, out of the three, I think this is the easiest to disrupt because from the insurer's perspective, they also don't want to rely on just one provider. And if there is another provider that has a very strong proposition, they just have to run parallel systems and SOPs to garner the highest sales price. I think when you look at some of these numbers produced by Copart, on the trailing 12-month basis, they did 4.6 billion in revenue, 2.1 billion in gross profit, suggesting a 45% gross margin, 1.7 B in terms of operating income, and that's 37% operating income margin, and 1.2 billion free cash flow, and that's a 26% margin. On an ROE and ROIC perspective, they did roughly 18% and 13% respectively. So then the natural question is, why is Copart suffering and trading at 52-week low? When you look at the last 5 years, on their cash on the balance sheet, it basically increased by nearly tenfold. So from July of 2020, cash and short-term investments was roughly 477 million, and today it's sitting at 4.4 billion. And naturally, when you look at some of these performance ratios, ROE on a standalone basis, when I talked about it at 18.44%, might sound significant, but 5 years ago, they were operating at 32%. And it's the similar story for ROA, ROIC, or even ROCE. So the cash reserves has close to 10x, and this cash drag has lowered their return on equity, and it might also signal potential reinvestment risks and a declining capital efficiency / uncertainty. So when stacked with cash, I think it could also lead to poor acquisition decisions, like we've seen in many business case studies. But I think large cash reserves also do give management the flexibility to be opportunistic in deploying capital, whether is it to acquire more land, to acquire other businesses, or even to do buybacks or give out dividends. But that's it. I think with a ballooning cash reserve, I think it's natural for investors to ask, what's next? So for Copart specifically, I think they are also seeing some sort of a growth ceiling in the US as their total addressable market is maturing. It's limiting their high growth runway, and with slower growth will naturally come some sort of a market multiple contraction. So although they are looking towards expanding internationally, and they have also kind of succeeded in some other geographies too, but like any expansion project, especially when it's not in your main market, there will be a lot of testing, a lot of trial and error, and a lot of investing and expenditure being incurred. So the numbers will probably look bad in the short term before some of this calibration and adaptation. So the street estimates, on Wall Street at least, is that they are still looking at a high single to low double-digit revenue growth and earnings growth for the next 3 years. So we are looking between 8 to 12%, give or take. But I think there is also a long-term automation risk. And I think the consensus today is that there is a lot of push in this whole autonomous driving and advanced safety tech development. And this could actually reduce the total accident volume over the long term. And if there really is an overall decrease in accident incidents, it will actually lower the salvage supply, which is a direct impact on the input for Copart by shrinking the total lost vehicle pipeline. On the flip side, however, there are also very many convincing arguments to say otherwise. Firstly, I think the technological adoption is slow and the fleet turnover usually takes decades. Secondly, I think there are more sensors and complex electronics increasing repair costs, and this will usually boost the total loss frequency, which then increase the supply for Copart. And more importantly, I think even in an autonomous future, vehicles will still age, they will still suffer from weather or catastrophe damages and require end-of-life disposal. So then the natural question is, why did I buy Copart? Firstly, I really found the business interesting and I wanted to follow the company closer. So I did a starter position so that I have skin in the game. Secondly, I think considering the rest of my portfolio being very tech heavy, and as we know, many of these tech companies talk a lot about intangibles, their network effects, their switching costs, so on and so forth. But Copart is quite an interesting and also a good addition because in a high barrier physical mode business, they're actually tied more to accident volumes and insurance claims. So they are a lot less cyclical compared to all these advertising businesses or e-commerce and so on and so forth. So I do see them as some sort of a better diversifier, and I do want to add on a little bit more of many of these more bigger physical mode businesses in the portfolio. And of course, at their current weightage, I definitely would love to add more Copart if Mr. Market wants to offer it to me cheaper. And I don't mind increasing my exposure significantly to 3 to 5% of the overall pot if given the chance. I think valuations could probably come down a little bit more for me to bite a bigger size. So that's where I sit with Copart today. And now, I think let's talk about Novo Nordisk. And just to give you a full disclaimer, I think both Novo Nordisk and Eli Lilly are not companies that I will usually look at or invest into. They are mainly in the bio-pharma space. And yes, I've broken my own rule and I'm probably very out of my own depth and competence. But I thought it was a pretty interesting case study. And for those of you who haven't been following Novo Nordisk, over the last 1 year, their stock price performance is actually at a staggering negative 60%. And what actually happened? And here's my TLDR understanding of Novo Nordisk. And their shot to fame really were made mainstream due to their Ozempic weight loss drug. And the core principle of these miracle drugs is related to this hormone called GLP-1. And it's an intestinal hormone that the human body actively secretes after we eat. And they're responsible for lowering the blood sugar and to controlling appetite. And Novo Nordisk has a very strong foothold in this whole diabetes, obesity care space. And they originally used it to treat diabetes. And the first generation of this GLP-1 drug was pretty lousy. It only lasted for short periods of time, and you need to inject yourself for several times a day. And only when the third generation came about, where it requires weekly injections, and it helped people actually lose 15 to 20% of their weight in a year, did it start to become mainstream. And Novo was actually the first to receive the approval from the US FDA. So Eli Lilly, on the other hand, actually found another discovery. They basically combined GLP-1 with another peptide called GIP to produce a much more obvious weight loss results, which is Mounjaro and Zepbound. So Mounjaro is FDA approved for type 2 diabetes, and Zepbound is much more for recreational weight loss usage. So Eli Lilly had a better commercialization speed due to their network and distribution, where Mounjaro has also already surpassed the weekly subscription of Novo's Ozempic. And here's the general overview. Novo Nordisk first created Ozempic. It basically shot them to fame, and Ozempic is FDA approved to treat for diabetes. Wegovy, that is more for recreational weight loss. Eli Lilly, on the other hand, their closest competitor, then created Mounjaro and Zepbound to compete with Novo Nordisk's solution. So of course, there are also many other developments in the pipeline associated with amylin, glucagon, so on and so forth. And I'm definitely not a science graduate or student, so I wouldn't endeavor into that. But currently, it's all an experimentation. So another problem in this competition between Eli Lilly and Novo Nordisk is this loophole in an FDA regulation in association with compounding drugs. So the regulation actually states that if a drug production capacity is limited and the demand far exceeds supply, pharmacies can actually purchase active ingredients through their own channels and formulate their own versions. And that will be called the compounded versions. And it is estimated that some of these compounding pharmacies have actually captured around 5 to 20% of the weight loss market. And one of the leading players is Hims & Hers. And of course, there has been some drama that unfolded between Novo Nordisk and Hims & Hers, where they first established some sort of a partnership, and then Novo Nordisk break off and say that Hims & Hers was still using compounded, weak and lousy drugs, while Hims & Hers say that Novo Nordisk is strong-arming them to only use their solution. So not to go too much into the details, but just understand that there are very strong competitive pressures, even though that this loophole is kind of closed off right now. And one of the solution is that Novo Nordisk is going to apply the full extent of the law to go after some of this compounding drug pharmacy. But that said, I think it's still extremely competitive between both Novo and Eli Lilly in this case. And also not forgetting that in this whole pharma drug bio industry, there is a very big concern about patents. And I think the fastest patent expiration is actually in China, and they'll be the first country in the world to have a generic market. So really, things are not looking good for Novo Nordisk. You have a strong industry player coming in, Eli Lilly. Yes, even though it's a duopoly, but they are always neck and neck and trying to one-up each other. And then you have this compounding drug problem coming in to steal off some of your market share. And more importantly as well, your patent is expiring, at least in China. But in the US at least, I think there is still a good 5 to 6 year runway until 2030 before their patent expire. And here's my principle on why I avoid biopharma in general. Firstly, I think they operate in a very tough space, especially for normal layman investors to understand. There is a lot of R&D, a lot of testing, a lot of regulations, a lot of approvals. And you probably have more things that you don't understand versus what you know. Secondly, I think the revenue attribution model for all these drug companies companies are fairly unique, and they're not comparable with the normal companies that you understand of, like McDonald's or even Apple or Facebook, so on and so forth. For many of these general companies like McDonald's, once they create the SOP, they build a brand, there is a lot of stickiness. Customers will keep coming back and they are able to levy some sort of a margin and earn supernormal profits. But really, for a lot of all these so-called drug discovery or innovation, yes, they are protected by the patent, and after that patented period, that's where all the supernormal profits will be squeezed, and they are on to the next growth curve or next cycle to find for the next profitable drug. So really, when you do a lot of all these estimations, you can't necessarily project out a very steady revenue growth rate, where some drug companies can be extremely profitable, and after the patent is gone, revenue can actually contract by 50-60%. So in this case, you must really understand that there's some sort of a time limit in terms of how much they can earn. And of course, good drug companies will continue extending the time limit or create new timelines for themselves. And lastly, of course, I think the survival of such drug companies is only as good or profitable as their next experiment. And they must keep going all in to go to the next growth cycle. Comparing Eli Lilly's Mounjaro with Novo Nordisk Ozempic, which is the diabetes solution, actually in the most recent quarter, Eli Lilly's solution has already surpassed Novo Nordisk's. When comparing to Novo Nordisk both solutions, Ozempic is for the diabetes one, while Wegovy is for the recreational usage. I think Wegovy in the light blue line is seeing a significant increase in the adoption rate. And on a quarter-on-quarter basis, at least over the last 3 quarters, Ozempic has actually slowed down, but Wegovy is probably where most investors are putting their mind share on, thinking or estimating how big this market is going to grow moving forward from here. But here's the interesting thing. I think in the most recent Eli Lilly's earnings results, they were down quite a significant margin while Novo was up, because their pill-based weight loss drug results was significantly worse than Novo's pill-based results. Novo's oral solution actually resulted in a negative 17.4% average weight loss, while Eli Lilly's solution only gave a 12.4%. And of course, I'm not going to act like I know all the details, but as I've alluded previously, they're always neck and neck, they're always experimenting, one-upping each other, so we really don't know how things will play out. I think I've recently came across this bull case for Novo Nordisk, and I'm going to just quickly run you through what they say. So if to compare, Novo Nordisk was nearly trading at 3x of today's valuations in January. What changed? And there's nothing more than sentiments. In fact, if you to compare it to the last 10 years, they are trading at the lowest EV to EBIT multiple. Novo Nordisk still dominates the global diabetes market. It currently controls over 34% of the treatments market, up from 30% in 2021. And even if the growth in the weight loss segment stops, this segment is large enough to support high single-digit long-term growth rate. Novo's market position remains strong. So despite all the narratives of falling behind in competition, Novo actually grew its market share in GLP-1 category since 2022, comparatively from 60% to 62%, while Eli Lilly is from 37% to 35%, even though that we know that the general market has expanded significantly in the last 3 years. So Novo Nordisk has 4 blockbuster weight loss drugs in the pipeline, and he claims that they are all superior to Eli Lilly's pipeline drugs. And I'm not going to claim to know more, but the more important thing that we know is that Eli Lilly just announced last week that its pill led to 8% reduction after a 40-week phase 3 trial, while Novo's oral solution leads to a 17% weight reduction after 68 weeks, which is again superior. So the stock got hammered because the management lowered the guidance for the full year of 2025. So as much as the slowing sales, the USD loss of 10% against the Danish krone contributed to this revision. But really, if you look at the comparison, the difference in expression is pretty staggering. They gave the expectations of sales growth from 13 to 21% being revised downwards to 8 to 14%. And the difference in operating profit growth from 16 to 24% to 10 to 16%. But with all that said, I think if we were to just run the numbers, here are the assumptions. 50% annual growth rate for the next year, then the growth converges to 3% in the next 9 years. Operating margins remain the same, and the ROIC actually decreased from 25% to 15%, marginal tax rate at 25%, and the cost of capital is stable at 7%. And he did get an implied share price of roughly $108 per share. The current price actually indicates a 64% undervaluation, and that is a huge margin of safety. So there is a possibility that the fair value is even higher than this, as our model only assumes 8% annual growth for the next decade. And this is a very low bar for Novo Nordisk. And going back to my point, I think it's not all rainbows and sunshine. So firstly, I think I generally agree that this weight loss drug segment or industry has a huge total addressable market, especially for recreational use. But after the patents expire, given the huge pricing disparity compared to the compounded drugs counterpart, I think they'll be forced to reduce prices because there is not much pricing power here. And that would significantly impact the current revenue base of Novo Nordisk. So even if you say that they were to grow at 5 to 8% into the next 5-10 years, who is to guarantee that the revenue base will be protected? I think that's the first point. But that said, I do think that the diabetic segment might still be protected due to the existing insurance coverage and the networks that they already established in the healthcare systems. But I do believe that the payers could also push otherwise for lower cost solutions. Or in general, just Novo Nordisk just reducing their prices. But in that case, I think that will have a very detrimental impact. And this is just considering the existing drug solutions, not considering the oral or the new patents that are going to come out. Secondly, I think drugs in the pipeline is also a coin toss. Yes, I think there were many discussions of his argument saying that who is more superior, which drug is better than which drug. Like I said, I'm not a scientist, and even I believe people in the industry might not have such a high confidence interval thinking that Novo Nordisk already win the market. And I think lastly, my third largest concern is that I think the current US administration's focus on healthcare and drug costs could actually pose some potential challenges to some of these drug companies. And just a very simple comparison, looking at Ozempic pricing between US and Europe, Ozempic in the US costs approximately $900 to $1,000 per month, and Wegovy is about $1,004 per month. Europe, in contrast, is around between $50 to $120 per month. And that's close to a 10 times difference. And as we understand, we really don't know what the man in the White House is thinking and how he's going to impact or pressure some of these drug companies. And after considering everything, the natural question is, why did I still buy Novo Nordisk? And by extension, even added to Eli Lilly? I think to be completely transparent, I'm still asking myself this question until today. And yes, I think I've broken my own investment rule, and these companies should automatically go to my too hard pile. But I guess that's what makes me human, and always with my own itchy fingers too. I too am fallible. Personally, I think I'm heavily influenced by two investors that I follow privately. They started a position in Novo Nordisk, and I quote-unquote FOMO, fear of missing out, after sitting on the sidelines following this weight loss miracle drug story for some time now. So I've talked to 3 people separately on the Ozempic drug, and they had nothing but raving reviews. So I'm putting aside money that I'm currently willing to lose into this position. And I will have a hard cap probably by dollar value, and I wouldn't adjust it even if my portfolio size grows. So I do want to express the view in this growth curve of this whole weight loss industry. So I decided to buy both Novo Nordisk and Eli Lilly in a 2-to-1 ratio. And this is mostly guided by valuation concerns. But I don't want to just discount their closest competitor in this duopoly, so that's why I just picked up both companies to add to my portfolio. But I just looked at them as a combined position, and currently I do have a 1% exposure in this whole weight loss industry. And to sum it all up, I think like the drug experimentation, I think this is also an investment experiment for myself. And with that in mind, I'll see you in the next video, but more importantly and hopefully, I'll see you guys on the moon. Goodbye!